All right, listen carefully, because the stocks we're talking about today are not your typical safe, boring blue chip plays. These are penny stocks trading under $1. And when I say under $1, I mean the kind of stocks Wall Street ignores until they explode. I'm talking about small cap companies with the potential for 5x, 7x, even 10x returns if the right catalysts hit. And here's the thing. When a stock is trading at 60 cents, 40 cents, even 20 cents, it doesn't need a massive move to double. It only needs attention, volume, and one major catalyst. That's why this video is a must-watch if you're serious about high-risk, high-reward investing. Because today I'm breaking down 3 of the best penny stocks under $1 you can buy today. Companies with real businesses, real catalysts, and real upside potential. Now, before we jump in, do me a quick favor. If you want more deep dive research on penny stocks, small caps, and explosive growth plays, smash that like button. Let's aim for 500 likes on this video. That tells me you want more of these breakdowns. And if you're new here, subscribe right now and turn on the bell notification. Because when we cover these plays early, timing is everything. Now let's get something very clear. I am not a financial advisor. This is not financial advice. These are high-risk investments. Penny stocks are extremely volatile. You can make a lot of money, but you can also lose a lot of money. Always do your own due diligence before investing. All right, let's get into it. The first penny stock under $1 you need to watch closely is Cybersecurity, ticker symbol CYCU. Cybersecurity operates in the cybersecurity space, and if you've been paying attention to the global economy, cybersecurity isn't just important, it's critical infrastructure. Governments, corporations, hospitals, financial institutions, they all need protection from cyber attacks. And the cybersecurity industry is projected to surpass hundreds of billions of dollars over the next few years. Now here's why CYCU gets interesting. It's trading around the 30-cent range. That gives it an incredibly low market capitalization. Relative to the total addressable market it's operating in, this is not a trillion-dollar company. It's a small-cap firm positioning itself in a high-growth industry. When small companies secure even one meaningful government contract or enterprise partnership, the impact on revenue can be massive relative to their size. From a valuation perspective, CYCU is trading at a fraction of what established cybersecurity firms trade at in terms of price-to-sales multiples. That disconnect creates opportunity. Now, let's talk catalysts. Cybersecurity companies often move sharply on contract announcements, new technology launches, government defense budgets, or compliance mandates. If CYCU announces a major federal contract or strategic partnership, you could see serious volume flood into this name. And with penny stocks, volume equals momentum. Momentum equals explosive moves. If the company demonstrates revenue growth acceleration or announces new defense or enterprise clients, this stock could easily see multi-bagger returns from current levels. This is the kind of stock that doesn't need perfection. It just needs progress. Now let's move to stock number 2, BNAI. BNAI operates in digital media and emerging technology. And what makes this interesting is the macro environment. We're living in a content economy. Digital engagement, streaming, AI-driven personalization, this entire ecosystem is expanding rapidly. Small-cap tech names tied to digital transformation can see massive price appreciation if they show user growth, monetization improvements, or platform partnerships. BNAI is trading well under $1, which means it's deeply discounted relative to larger digital media firms. If the company reports improving revenue trends or signs distribution deals with larger tech players, that narrative can change overnight. Remember, in penny stock land, perception shifts quickly. If investors begin viewing BNAI as a turnaround play instead of a distressed asset, the re-rating alone could drive 3x to 5x upside before fundamentals even fully catch up. And here's another key catalyst to watch: potential uplisting. If BNAI improves compliance metrics, whether that's share price stability, financial reporting, or restructuring, the possibility of exchange upgrades can attract institutional attention. Institutional attention brings liquidity. Liquidity brings momentum. Momentum brings parabolic moves. Now let's talk about stock number 3, LPTX. This one operates in biotech. And biotech penny stocks are a different animal entirely. They are volatile, they are speculative, but they can be explosive. LPTX focuses on oncology and therapeutic development. In biotech, everything revolves around catalysts: clinical trial results, FDA updates, partnership deals, and data releases. The reason biotech penny stocks can 5x or 10x is simple. When a drug shows positive clinical data, the valuation of the company can change overnight. Investors price in future revenue potential immediately. If LPTX reports promising data from trials or secures funding from strategic pharmaceutical partners, the upside could be dramatic. Now, let's talk valuation. Many biotech penny stocks trade near cash value during periods of uncertainty. That means downside can sometimes be somewhat limited relative to the upside of a successful trial. Of course, there's real risk. Failed trials can crush share prices. But when you're looking for asymmetric opportunities, biotech under $1 is where those asymmetric setups live. And here's what smart investors do. They don't blindly throw money into one stock. They build positions responsibly. They monitor catalysts. They manage risk. Because penny stocks are not long-term retirement holdings. They are strategic, high-conviction, high-risk trades or small portfolio allocations. Now, let's zoom out. Why focus on stocks under $1? Because psychologically, investors are drawn to low share prices. A move from 50 cents to $1 feels more achievable than a move from $50 to $100, even though percentage-wise, they're identical. That psychological factor drives retail interest. Retail interest drives volume. Volume drives breakouts. And in small caps, breakouts can get aggressive very fast. But you must understand something critical. Not every penny stock under $1 is a hidden gem. Many are under $1 for a reason. Debt issues, dilution, poor management, declining revenue. That's why we focus on companies with identifiable catalysts, growing industries, and improving fundamentals. CYCU gives you cybersecurity exposure in a growing digital threat landscape. BNAI gives you digital media and tech exposure in an expanding content economy. LPTX gives you biotech upside tied to clinical milestones. 3 different sectors, 3 different risk profiles, all under $1. Now imagine this scenario. One of these stocks announces a major contract. Another releases strong earnings. Another posts positive clinical data. You don't need all 3 to succeed. You need one to go 5x to offset losses and generate net gains. That's the math of high-risk investing. It's about asymmetric reward. Now I want to hear from you. Which of these 3 penny stocks is your favorite? Which one do you think has the highest 10x potential? Rank them in the comments. Number 1, number 2, number 3. And remember, this is not financial advice. I'm not your financial advisor. Do your own research. Study the balance sheets. Read the filings. Understand the risks. If you enjoyed this deep dive and you want more serious penny stock breakdowns, smash that like button. Subscribe if you're building wealth through high-risk, high-reward plays. And follow me on Twitter X for real-time market thoughts and updates. Because opportunities don't wait. And in the world of penny stocks, timing changes everything. Stay disciplined, stay informed, and stay ready for the next breakout. I'll see you in the next one.